The Ghermezian family's retail empire, once a symbol of success, now stands on the brink of collapse, ensnared in a $5 billion debt spiral. How did this happen? They ventured too far, fueled by an optimistic vision of relentless expansion without heeding market realities. A decision to over-leverage their resources and pursue high-risk investments proved fatal. Banks, trusting the Ghermezian name, were all too eager to finance this ambitious dream, believing past successes could carry them forward. The stakes were high, with thousands of jobs on the line and entire communities dependent on their thriving malls. Yet, warning signs were flashing. Critical leases went unrenewed, casting doubt on the stability of their tenant relationships. As the financial landscape shifted, the core mistake became evident: an aggressive growth strategy that ignored early signals of a weakening market. Investors' faith in the Ghermezian brand turned blind to emerging threats, and what once seemed secure quickly faded. When revenue first dipped, it marked not just a minor setback, but the start of a tumultuous trend. The small losses snowballed into larger ones as tenant turnover escalated, leading to alarming cash flow pressures. Executive meetings turned frantic as they scrambled to address rising debts. A liquidity crisis soon followed, jeopardizing day-to-day operations. Banks began foreclosing on properties, signaling an institutional collapse that led to widespread layoffs. The human cost was staggering. Families lost their livelihoods, and communities watched as their economic foundation crumbled. As the Ghermezian family continued to ignore the mounting challenges, the situation deteriorated further. Each new quarter brought deeper losses, weakening supplier confidence and damaging local businesses caught in the fallout. Malls that once buzzed with activity became desolate shells. The foundations of the family's success lay on shaky financial ground, and the decision to ignore market shifts ultimately jeopardized their future survival. Now, with their empire teetering, the aftermath is grim. Communities are left reeling, banks are under scrutiny, and trust in the financial system has eroded. The cycle of ambition unchecked has yielded undeniable lessons. The temptation of rapid expansion without due diligence can lead to catastrophic consequences. Accountability must replace hubris, and vigilance must be the standard in finance. What was lost? Trust, jobs, and the very essence of community strength. As the dust settles on the Ghermezian family's downturn, the stakes of unchecked ambition remind us that the price of success can be steep, not just in dollars but in people's lives and their futures.